Barron from Remax here with my weekly update for the real estate markets in Milton, Georgetown, and Glen Williams. This is for the week of November 22nd to the 29th, 2020. Before I get there, I missed last week. I had to miss for some reasons, but anyways, I had to miss. But I did the previous 2 weeks ago. I talked about investing in real estate and how it can be such a lucrative thing. It's created more millionaires in Canada than any other business. And I'm kind of going to explain how it works. 2 weeks ago, I talked about renting, about getting the right tenant, which is extremely important when it comes to investment properties. But the next thing I want to get to is, so how does it work? Like, how do you actually, make money off of it? So I've come up with an example for you. I usually do a spreadsheet, and I meet with groups of investors occasionally here and there, and I go through all the pros, the cons, everything with them, so they can be educated before they actually jump and invest. But real estate is generally considered one of the safest investments you could possibly put money into, because it doesn't go down to zero. Stocks, bonds, all that stuff can, as we, I don't know if you guys are old enough to remember Enron, but anyways. Let's see. So I'm taking it as an example. Say you own a house and you want to buy an investment property. You're going to have to come up with 25% down payment on the new place, just to keep that in mind. So as a hypothetical kind of example, I've come up with a $600,000 property. Say you want to buy a $600,000 property, not a condo, a freehold. Detached possibly, maybe in Hamilton or something like that, which isn't a bad bet. Let's see, so if it's a $600,000 property, you have to put $150,000 down, which is 25%. And let's assume you got about $10,000 worth of closing costs. So you're in there for your total investment of $160,000. Let's see, so I did some rough numbers. I'm not gonna really shop around for a mortgage. So if you go for a basic 5-year fixed mortgage right now at TD, say, and you don't really try and negotiate or anything like that, you're getting about a 2.14% mortgage. $450,000 mortgage, 25-year amortization, roughly $1935 per month mortgage payment. So let's see, you've got your $150,000 you put down to $10,000 in closing costs, which means $160,000 out of pocket. You could have possibly taken that out of your principal residence, or you could have saved that on the side. So everything's great. You buy a house for $600,000. You find the tenant. And the tenant's paying, say, $2,200 a month. Every month you're making what's called cash flow positive of $265 a month, which is $2,200 minus your $1,935, which is your mortgage. But I haven't taken into consideration a few things like taxes. Taxes are always good to know. So roughly about $3,200 per year positive cash flow, but it's really kind of zero, because after you pay taxes and everything, there's nothing left. You might actually be a little bit cash flow negative, but don't worry about that. That's okay. So I'm coming up with a real estate on, throughout the years has gone up by 3%. It goes up, goes down, goes up, it goes down. If you look at the graph of real estate over, say, 30, 40 years, it's roughly a 3% increase per year. This year we've had 15 to 18% increases, which is crazy, and not sustainable. But let's see, if I go with a conservative 3% per year increase in the property value, in the first year, that $600,000 property is going to go up by $18,000. So hypothetically, it's worth $618,000. You have a $160,000 investment you put into the property, and you made $18,000 profit. So if you do the math on that, that's approximately 11.25% return on your investment in year one. So that's pretty darn good. That's pretty solid. You can make better returns in other places, but the higher risk, the higher the return. But with, like I said earlier, when it comes to real estate, the chances of you losing everything are very slim. And then I kind of took the example of this year with properties going up 18%. This is crazy though. This isn't going to happen all the time. But if you bought that same house in 2019 for $600,000, it's gone up, say, 15%. You're looking at a $90,000 appreciation on your investment, which is 56%. Because the key with real estate is it's not your money. That's the key. Even though you put $150,000 down, the bank is giving you $450,000. So they're giving you a $450,000 at a 2.1% interest rate, but you're turning around and using that $450,000 to get a massive return. So that's what you're doing. You're leveraging $450 of somebody else's money, and you're collecting the return on that. The bank's not. You're getting the profit on it. So that's why, you can actually start to, once you get a hold of things, as things start rolling, you can buy one investment property. It's gone up. You can take some equity out of that, buy another one. It goes up, take some equity out of that, and over time you can build up a pretty good portfolio worth, could be potentially millions, tens of millions if you really do it right. So anyways, any questions, let me know about investing. That's really quick, kind of, rudimentary kind of, synopsis of investing in real estate. If you want more details, just let me know. I have spreadsheets and everything I could send you. So anyways, let's get to the sales for the week of November 22nd to the 29th. It's been a good week. In Milton, 41 sales as opposed to 25 last year in the same period. And the funny thing is, last year in November, December, it started to really tick up. So that's, once we got into January, February of last year, it started multiple offers again. So it's interesting that the sales are still higher than last year. Out of those 41 sales, 11 sales were townhouses, 732 on average, 4 days in the market. 26 sales of detached at 1.123, 5 days on the market, and semis, 3 sales at 833 and 5 days on the market. So things are still active in Milton. And Georgetown and Glen Williams is interesting too, because I remember 2 weeks ago when I did mine, the sales were actually a little bit lower than 2019, whereas this week, sales are exactly the same as 2019. And I remember 2 years ago very well, or last year in Georgetown, when they slowed in November, and all of a sudden, it just took off for some strange reason at the end of November. So the fact that we're keeping up with that is a good thing. And interesting too, I've never seen this before, where every single home sold in Georgetown and Glen Williams was a detached. There was no townhouses, no semis. So that's kind of interesting. But that's just because of the supply. There's not a lot of towns or semis in the town. 18 sales, average of 1.017, and 9 days on the market. So things are still active. Things are still selling well. Anyways, that's it for Georgetown and Milton. Any questions? Again, Cliff Barron from Remax here. Any questions, let me know. Send me a DM, PM, text, or old-fashioned phone call. Thanks. Take care.